Welcome to Zahra Finlight, where we make finance simple, smart, and accessible for everyone. Whether you're a student, a beginner in business, or just curious about how companies manage their money, you're in the right place. Today, we're going to explore something absolutely essential: financial statements. So, what exactly are financial statements? They are official reports that explain how a business earns, spends, saves, and grows its money. They help us understand a company's performance and financial health, in simple terms, whether it's doing well or not. Now here's the thing. Every smart investor, banker, entrepreneur, and analyst uses these reports. And you should too. There are three main financial statements you need to understand, and by the end of this video, you'll be confident with all three. Let's start with the first one, the income statement. This statement tells you whether a company is making a profit or a loss. It shows all the revenue that came in, and all the expenses that went out. When you subtract expenses from revenue, what you get is the net profit, or net loss. Let's take a simple example. Imagine Zahra Cafe made 1 lakh rupees in sales last month, but it also spent 75,000 rupees on rent, salaries, electricity, and ingredients. That means the cafe earned a net profit of 25,000 rupees. That's what an income statement shows, your business performance in numbers. Next up, the balance sheet. This one is like a snapshot. It shows everything the company owns, owes, and what's left for the owners. The basic formula is assets equals liabilities plus equity. Assets are things like cash, inventory, and equipment. Liabilities are loans and bills the business needs to pay. Equity is the owner's share after paying off debts. Here's another Zahra Cafe example. Let's say the cafe owns assets worth 5 lakh rupees, including equipment, cash, and furniture. But it also owes 2 lakh rupees in loans. That means the owner's equity is 3 lakh rupees. Simple math, right? That's the power of a balance sheet. Now comes the third one, the cash flow statement. This report tells you how money moves, how much cash comes in, and how much goes out. Cash flow is divided into 3 areas: operating activities, investing activities, and financing activities. Operating activities include sales and expenses from your daily business. Investing activities cover things like buying or selling equipment. Financing shows loans taken, or money paid to shareholders. In short, the cash flow statement answers one big question: do we have enough money to run the business? And trust me, many businesses fail not because of losses, but because they ran out of cash. So why do these financial statements matter? Because they help you make smart decisions. Want to know if your business is growing? Check the income statement. Want to apply for a loan? You'll need a solid balance sheet. Want to make sure your business won't run out of cash? Look at your cash flow. Together, these 3 statements give you the full picture. They're like your business's health report card. Let's quickly summarize. The income statement tells you about profit and loss. The balance sheet shows what you own and owe. The cash flow statement tracks how your money moves. Master these 3, and you've mastered the language of business. Thanks for watching. If this helped you, don't forget to like, comment,